It was very easy to summarize this first half of 2024 by saying AI. Just showing the chart of NVIDIA, saying this is what happened in the first half of 2024, and probably end the video there. But I decided to take a different route, to dive into the details, to dive into the analysis, to look at the numbers, to equip you with all the data that you need. That if you hear someone saying, oh, come on, S&P is up only because of 3 or 4 stocks, you'll be able to know the exact data, what happened in the first half of 2024. And yes, it was a very good half, but does that mean that we're done and we're going down from here? Let's analyze, let's look at it. Are you ready for it? Let's go. Hello everyone and welcome back to the channel. If you're new, hi, I'm Micha Stocks, and on this channel we talk about stocks, we talk about the stock market. Everything and anything that you see here is not financial advice, it's just for educational and entertainment purpose only. And you know what? If you're here and you haven't subscribed, I would really appreciate if you can subscribe to the channel, turn notifications on, and then you'll be able to get notified every week that I post these weekly summaries. You can't start summarizing the first half of 2024 without looking at how we ended 2023. S&P was at 4746. Analysts and strategists thought that we would be between 4,200 and 5,400. Yardeni Research was the highest in the market, saying 5,400, and most were around between 5,000 and 5,100. But the market is the market, and he said, I know better. Although Deutsche Bank said 4,500, JP Morgan said 42, Wells 42, Bank of America, Citi, you can see all their price targets for 2023. And here came 2024. With Russell up 1.6, Dow up 3.7, but look at the S&P, up 14.4 for the first half of 2024. NASDAQ up 16.98. Yes, it was a marvelous first half, no doubt. Look at the different indices. You can see that communication and technology leading the pack with 17 and 18% gains. But on the other side, we see the real estate, XLRE, suffering from high rates, suffering from people just not moving. First home buyers are out of the market, they can't afford it, and the rest is history. What we did see is a lot of wealthy people buying real estate with cash-only offers. The reason for that is because mortgages are very, very expensive. And all the rest of the indices, you can see them here, under the average of the S&P 500. You see the XLE at 10%, XLF, which is the financials, 10%, and all the rest, you can see them trickling down. When you dive in, the best performing sector for 2024, at least for the first half of 2024, was semiconductors, SMH, ETF that combines by weight NVIDIA, AMD, ASML, and others, up 49% for the week, for the half, sorry. On the flip side, you can see the solar stocks down 24% in average. Crypto seems like it's just going down. Well, if you were lucky enough to buy January 1st, you are up 40% if it was Bitcoin and 44% if it was Ethereum. Then why do we feel like the crypto market is going down? The reason for that is very simple. Psychology. Most of the gain came from about the first week of February all the way to the first week of March. It happened very fast, just like the crypto market knows how, and very rapid. After that, we see consolidation. Okay, so this is the reason why we saw it going up and why it's 40%. And this is the reason why we feel it's just going down, just because of the length of time that we see these moves. And when we look between natural gas, silver, gold, and crude oil, we see we're up between 12% to 22% for silver for the year. And that brings us to the Magnificent Seven, the Magnificent Six, the Best Five. You can call them in every call you want. At the end of the day, we had one stock that went up 149% for the year, and that's NVIDIA. Meta up 42%, Google up 30%, Amazon up 27%, Microsoft up almost 20%, Apple, green on the year, plus 9.6%, and Tesla, the worst performing stock out of the Magnificent Seven, down 20% for the first half. Will the second half beat Tesla's second half? We will need to see. And this brings us to the Russell 1000 stocks for the first half of 2024, the best performers from 46% all the way to 149. We see companies like NVIDIA, Vistra, Kava, AppLovin, Vertiv, Hood, Natera, Spotify, even Wingstop up 64% for the year, for the half, NU Holdings up, Micron up, CrowdStrike entering the S&P 500, Anet Networks or Arista Networks, Palantir, Interactive Brokers, and even Dick's Sporting Good up 46% for the year. And that brings us to this table that shows us the different countries, the different averages, but let's focus on countries right now. All of the countries that are mapped here, which are the bigger stock markets that exist, have not beaten the S&P 500. The only one that came close was India, with the movement of people from China to India from an investment thesis point of view. But at the end of the day, none beat the S&P 500. Brazil down almost 20% on their stock market, and Mexico down 15.8% for their stock market. And again, I'm going to use FundStrat, very explanatory chart that says, or tries to eliminate the claim that says only 5 stocks are the one that pushed the S&P or pulled the S&P up, and all the rest were not performing. Well, the data is not that. 8% of the S&P 500 stocks, 40 stocks went up more than the S&P 500, went up 30% and more. 16, of course, that's the 8 plus 8, moved 20%. 24% moved at least to the S&P 500 average, if not more than that. That's a quarter of 500 stocks went up, at least as the S&P did, and more. This is not a 4 or 5 or 10 stock rally. This is a quarter of the S&P 500 rally. That's over 100 stocks that are rallying more than the S&P 500. But as usual, there's always the flip side of it. 40% are negative from the beginning of the year, and that is something that we would like to eliminate. We would like to see more and more stocks being positive. Of course, that will even push the S&P even more. When we look at the dollar index, you can see that the dollar is moving up. This is in increments of 5 months. You can see the dollar moving up. This is not good for the technology stocks going into the second half of 2024. Why? A higher dollar means less earnings for these companies. When we look at the 10-year yield, you can see that it peaked around April this year and is going down. You can see lower highs and lower lows. This is very good for the stock market, at least for the smaller companies, for the Russell companies. Why? Because lower rates improve their ability to return their loans, and that is better for them from an earnings perspective. And now let's dive into specific details and specific statistics that are not commonly talked about. Let's compare between men and women as CEO from the Russell 1000. Apparently, there are 74 CEO women that performed, or their stock performed, better than 928 men. By average, women or their stock went up 9.4 and men 8.12. When we look at founder-led versus non-founder-led, you can see that founder-led companies out of the Russell 1000 perform better than non-founder-led, which means that companies should keep their founders because their performance is better. When we look, is there a correlation between compensation? We find that it's actually the opposite way. The CEOs that were the highest compensated, their stock performed worse than the lowest compensated, meaning don't pay the CEOs. And when you say, okay, I won't pay them, but should I give them equity? The answer is no, don't give them anything, because apparently the CEOs that had the lowest amount of equity actually outperformed the ones that had the most, meaning just find people and tell them to be a CEO. No salary, no equity. And of course, this is just to make you laugh and understand, but these are true numbers, by the way. And thanks to Bespoke for gathering all these numbers and information. And let's talk about China. China didn't have, you know what, for the last 5 years, they don't really have a good stock market. This year isn't different. They're under their 50 and 200-day moving average, respectively. It's just not a good place to invest in, at least not now. And this is something that is moving our market in the last year and a half. PCE, it might be a combination of CPI and PPI and others. You can see PCE coming down. On a monthly rate, we're at about 1%. At a 3 months rate, we're at 2.7%. 6 months, we're at 3.2%. And an average annual, we're at 2.6%. We're still higher than the 2% average or target of the Fed. That doesn't mean that the Fed will not drop rates. What it will not drop rates. It does mean that inflation is rolling over and coming down. And last but not least, before we talk about the second half, let's talk about the spending of the consumer. As you can see, this is the drop in COVID, and we are back on our trend line, meaning that consumer discretionary companies are back making money exactly as they did before. And why is that important? Because it means that we can put COVID behind us and look forward at how they can grow earnings with more power. But now, let's talk about the second half. If everything was so good the first half, you probably think that everyone is saying that it's going to be amazing. Well, that's not the case. BCA Research came out on Friday saying they believe that late 2024 or early 2025, the stock market is going to drop by 30%. You think they're crazy? Look at Marko Kolanovic. Marko Kolanovic says that in his mind, S&P is going down to 4,200 by end of the year. That's a 23% drop. Why am I mentioning that? It's because we cannot be complacent with the fact that the market is just going up. Yes, strategists and economists are right now bumping up their forecasts. But we need to remember there are people like Marko Kolanovic and JP Morgan that's saying it's going to drop to 4,200. We need to be very aware of the fact that there are still people that believe we should go down. And why would we go down, or why should we go down? Well, it might be the presidential election at November, which currently, at the time of this recording, June 29, these are the two nominees. Why am I mentioning that? Because until November, who knows who would be the ones that are going to do that? I don't know. You probably don't know either. And the other thing, or the other reason, is just plain statistics. Peak to trough, maximum correction this year was only 5.5% on the S&P 500. It feels like we didn't really have a correction. Every small correction felt dramatic. I'm talking about the S&P. I'm not talking about specific stocks that might have gone into a bear market, by the way. But the problem is that this historically is low. Usually, peak to trough on an election year, the average since 1950 is about 13%, which means that we might still see a very strong correction, and we need to be ready for it. And if we talk about being ready for it, let's look at the SPY chart. November was the perfect bottom, and from November, here it is, the perfect bottom, and from October, November 2022, we started going up. When we look at where we are today, this is the 50-day moving average. And if I'll pull the 150-day moving average, you can see that we are further away from the averages as we should be, which means that we might see a correction to the prices that we had an average in the last 50 days. That is common. It doesn't mean that tomorrow morning the stock market is going to crash. It doesn't mean all these things. It might, but it doesn't say that. All it says that we need to be aware of the fact that we are running hot. We can run hot for a long time, as you can see here. But as we get far away from the moving average, because it's an average, eventually we will crash into it, just like we did between March and April. It does not mean that from April we didn't have another run, which might be exactly as this. But what we need to be aware of is the fact that we are still further away from the 50-day moving average. And we have, from a technical perspective, we have open gaps that we haven't closed, whether if it's on the S&P 500 or on the NASDAQ, the QQQs. So we're currently in a very bullish trend, but we are overbought. We're at a point where it won't be surprising if we might see a correction. But we're in the best 2 weeks of the NASDAQ in an election year. So how does it all combine? Well, when we look at the second half, we need to remember there are a lot of headwinds, but there are also tailwinds. Fed might cut rates. We might get some kind of resolution between Russia and Ukraine, maybe Israel and Hamas. We don't know yet. So we have both headwinds and tailwinds, and we just need to look at the charts and see where we are compared to our moving average. If we're a lot higher than it is, we might see corrections. If we're a lot lower than, and it's not a crash, then might be an opportunity. Hope you enjoyed summary of H1. Next week, we'll be back with a regular weekly summary. I'm Micha Stocks. You can smash that like button, and I'll see you next week. Till next time, bye-bye.